Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I just wanted to go over the 5-day chart and maybe a couple other time frames just on a macro perspective. No real agenda. If you want to find out what's going on in the world of Bitcoin and crypto right now, go ahead and check out my previous episode, or you can go ahead and check out the links that I'll include in the description. Can Bitcoin go to 25,000? And also the hyper bullish case for crypto. So the thing about those two videos is that, in all honesty, we're still right in the middle balancing point between whether or not we're going to tip all the way down or whether we could have a possible bull run. It really doesn't make sense to be talking about, super high targets, and it doesn't make sense to be talking about super low targets. In terms of targets and calls, the way that some people on crypto Twitter and on YouTube, they try to make these calls. I definitely respect traders that are talking about, taking things level by level. Those type of common sense traders who are just trying to put food on the table and taking their profit where they can. It's something that I've emphasized on this channel time and time again. You take your profit where you can because you never know where the market is just going to, completely randomly from, possibly your perspective, just completely dump and shake you out of the market or, liquidate your positions or just have multi-year setbacks, right? Multi-year setbacks until you break even. And if you didn't take your profit where you could, then you ended up holding the bag for possibly years, right? That's if your coins even survived that period, because a certain amount of coins will just go extinct. The projects don't have enough money to get through a bear market or a downturn economy, a global recession, etc. They don't have enough money to fund engineers and CEOs and all these executive staffs and marketing. They don't have the money to fund that. That's why, people like my mentor Crypto Reda and others emphasize if you're gonna hold altcoins, you want to be holding blue chips, and blue chip just means that they have investment behind them, so they have money to weather the storm. It doesn't mean that that project is going to suddenly 10x or 100x or whatever you want to imagine the gem that you're holding could possibly do. When you hear the term blue chip, it just means that it has funding and is more likely than some other coin to survive a crypto winter, a recession, a downturn, whatever. Whereas some other coins, which you might just call shit coins, colloquially, is just, they don't have the funding. They've already been bled dry. Maybe they have really vampire investors. And so, they're just going to scare people out of the coin. The coin's probably going to go dead. And the project might go dead if the team, got a bad reputation from their bad investors. So that's why we try to look at blue chips during down markets. And that's also why many people just recommend Ethereum or Bitcoin or some of these bigger name high caps, which have proven to be able to weather the storm. And so, one strategy that people have during down markets is to move some of their assets, if they still want to have exposure to the market, into blue chips or into those higher caps that are big household names that they have big ecosystems and they're gonna stay alive, right? So again, like that's up to you. Like that's your strategy, and that's not really what I want to go over today. I kind of want to address the trend of people saying like it's not appropriate to be talking about 20K. While I can definitely appreciate common sense traders who just take it level at level, and they take their profits regularly because they're putting food on the table. They are paying the bills. Those guys are doing their jobs as traders. Whereas some other guys are just acting like moon boys and doom boys. And so, but the thing is, it's very trendy right now to say don't talk about 20K. Like we have support here and here and here. And you know what we never hear? We never hear people say, don't talk about 50K, right? We never hear people say, don't talk about 60K, right? People are perfectly happy to talk about these ranges that, they've touched in the past on the upside, and they're very reluctant to talk about the ranges that they've touched on the downside. And one thing that we have to understand about this type of a chart is that it's an upward diagonal, right? It's an upward diagonal. It's not a horizontal. And so, in the past, we've had, some of these older traders who've been in the market for just years and years. And so they're really kind of fixed to this concept of the origin line of Bitcoin. And, this was an important kind of concept that came to be developed, in the world of crypto. Because, of course, Bitcoin is the most reliable and it's the oldest. And so it's really the crypto that we use as a reference for the rest of the market. Bitcoin leads the market, and so it's a great indication of how the rest of crypto is going to go. And if you ignore Bitcoin, you're honestly ignoring the kind of uh, predictive capabilities that you can be using to help understand how your altcoins might move, right? How the coins that you are in might move. And so analyzing Bitcoin is kind of the thing that we can all share together, that we can all analyze together. It's what the bots and the big institutions are trading, and so they move the market based upon the price of Bitcoin. And the concept of a master origin line was an important discovery. So I don't want to diminish it. But I do want to emphasize that it was kind of just shoehorned. It was just shoehorned into place. And if you look at the master origin line, to be honest, it doesn't really fit anything. It kind of has these touches down here. I mean, you could kind of jury rig it to like bring it up to this bottom, but then it leaks under it. You get a bunch of wicks that might go under or over it. It's never been perfect. I think traders, in 2018 and 2019, they kind of wanted to apply a floor. And so they just kind of like fiddled with this line until it kind of met, what they were looking for, right? And they just kind of lined it up here. And then, of course, because this was on a diagonal, of course it came back to meet it. And so, this line did in fact have significance, but it never really, Bitcoin never really respected it in, a way that, that was consistent. It's just sort of like you just took the bottom end of Bitcoin's diagonal range, and then you kind of ignored the bits that you didn't really care about, right? You kind of ignored this, this wick, you kind of ignored this area. And then COVID came along and you're like, oh, well, maybe this doesn't even make sense anymore. I thought this was the bottom. Like I thought we would never get below the master origin line, but no, we've gotten under it like we were under it here in the beginning. We were under it in the beginning. We were under it here. We got under it here. We got under it here, here. And look, we've even wicked down under it a couple times just recently. So this master origin line is basically Swiss cheese. Okay, there's a bunch of holes that are poked through it. It was a psychological crutch that was an important development when people didn't really see this price action as anything but horizontal, right? So if you get stuck in these horizontal, range kind of mindsets, then you can totally lose track of what's going on the diagonal, right? So let's just say that you're just looking like this at the chart, and you may be, you're just looking at this type of like horizontal price range, right? Let's see, like this. I probably should use a channel, but let's just use this box. So you're just kind of looking in these ranges. And that makes sense, like at the local level. At the local level, you can always kind of do this and you can always fit the price action into some kind of box, right? You can always fit it into a box. You don't really think outside of the box, you just think within the box. And then maybe, you make some type of, trend line inside of here, right? Inside of here. And for most traders, this is what you would consider like trading level by level, right? Broke down here, you short, right? You bounce, you get a confirmation on an uptrend, you can buy in on support and then sell at the resistance, right? So you have resistance up here. And in this way, you can make plenty of money just using these things and then possibly also analyzing supply zones, everything else. But the thing that these type of traders really hate is they really hate about thinking about these areas that are outside of their box, right? They don't want to think outside of the box. And the almost the more advanced that they get, the more that they zoom in, because the more and more they are kind of leverage trading, right? And so they get smaller and smaller and more confined, to their box, to the way that they want to think about the market. And their time frames get smaller and smaller because they're using leverage and they're trying to squeak out every little move. And so now they've got trend lines within trend lines. They've got all these things, you know, that they're looking at. And, these things just get, again, like smaller and smaller. Their boxes get smaller and smaller. And so they start saying things like, it's not appropriate to talk about 20K. It's not appropriate to talk about that, right? Because they're becoming experts in leverage, right? Experts in leverage. And so they're just looking at this stuff, just looking at this stuff. And eventually you're getting down here like on the 15 minute, and of course, if you're trading a range like this, on the 15 minute, and this is your range, right? And you're squeaking out, what, like 1%, which if you do 20x, maybe that's 20% or whatever, depending on how you do leverage, right? And so you can get in here and you're really just talking about 42,000 to 42,500, right? This is 42,250 to 42,600 basically, right? So you're just talking about like this 1% stretch. And so it becomes very trendy amongst these type of traders to just stay within their boxes. But the thing is, that's not the only time frame that exists, right? This is just look at this. I mean, yeah, you can get 20% and every trader would be happy making 20%. But zoom out and you've got this higher time frame, right? Maybe you're on the 4 hour or the daily, right? And this doesn't even make sense. You see how this doesn't even compute, right? On the daily, this doesn't even compute. But you could be on the 15 minute and be a wildly successful trader. Wildly successful trader. I have a friend named Yent Lee, and he's just wildly successful, like on these smaller time frames, like even the 5 minute, right? And he's one of those guys that I highly respect how he trades his levels because he puts, food on the table. He takes his profits and he understands how to do that. But the thing is that a lot of these guys, because they're so zoomed in, and I don't mean Yentley or any of these, these other guys that I respect. I'm just saying, like on crypto Twitter, it's becoming popular to say don't think about numbers like $20,000 because they're so confined into these tiny boxes, and they've been trading it for these tiny boxes for so long. They just don't like to think about the bigger moves that are going on here, right? And there are much, much bigger moves that are happening, right? There are much bigger moves. And so it's almost like, those YouTube videos where you zoom out and you can see the entire universe and you just see how small you are compared to the size of the entire universe, right? And What I would like to just say is that it doesn't make sense to disrespect others by saying don't think about 20,000. Like we were 3,000 right here. We went to $20,000, and people back here were saying no, 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 because they're so zoomed in. Like these traders are so zoomed in. I don't even know if I can zoom in at a time that far back. But these traders were so zoomed in, they couldn't see anything except, this type of, price action, right? And let's see, it's just too hard to move on those time frames. But you get the point. Like when you're that far zoomed in, you don't like to think about those huge moves because it could be highly disruptive. From your perspective, going from uh, you know 20K to 10K, it's almost unthinkable, right? Like it's almost unthinkable. Like these type of moves are extremely disturbing to you when you're on these small time frames using leverage, and how fast you can get liquidated and how fast this market just liquidates people. But you know, in fact, we went from 20K all the way down to 3K, right? 3K. This is the move that we did, right? 20K to 3K. And that's just normal. That's just normal for Bitcoin, okay? That's just normal for the crypto industry. Here we did it, pretty much the same thing, right? Went from, 14,000 to 4,000, right? We call this the COVID dump, but in fact, it was less extreme than just the regular Bitcoin price action. The regular Bitcoin price action, even outside of COVID, is more extreme than the COVID price action was. And so don't tell me not to talk about 20,000. You guys are like having your head in the sand who think that way. Get out of these tiny boxes. This is the tiny universe that you're living in when you say don't talk about 20K, right? And the thing that annoys me about it is that people are happy to like discuss the possibility of 100K. They're always happy to talk about the possibility of 100K. But to be honest, if we're thinking about where we are right now at 42,500, right? We're closer. We're closer to 20K than we are to 100K, right? 100K is about $60,000 away, right? 100K is about $60,000 away, whereas 20K is only $20,000 away. We're far closer to 20K than we are to 100K. And then some guys, they might, make, some type of arguments just for argument's sake and say, yeah, but we're also closer to zero, than we are to infinity. These type of strange arguments. Yeah, no kidding. Like that's exactly what I was saying. Like of course we're closer to zero than infinity, and infinity can't even be reached. But 100,000 is not infinity. Like that's just an absurd way to like try to like avoid discussions about these lower price targets that might frighten some people who just have like an up only perspective, because they have no problem like with people talking about 100K. They've never had any problem with people talking about 100K. But they have very serious psychological issues when it comes to like talking about 20K and the possibility of 20K. But even though we are 3 times closer to 20K than we are to 100K. And it's just food for thought. It's just something to consider, when you take your risk into consideration. Because the thing is that the people who are just zoomed in on these like tiny boxes and they're okay with these concepts, but not okay with, these concepts, right? They're going to miss the possibility to have the best buying opportunity of their life, should it come around. Because if they're telling people to not even think about these things, then what you're essentially doing is advising people not to plan. You're advising people to not have a plan, to just have their head in the sand and just target these numbers because you've never spoken against, talking about 100K. You've never spoken against people like having a plan in case like it goes to 100K. But for some reason, you have to continuously insult people who talk about the possibility of these smaller numbers, right? About tagging these smaller numbers. And yet, the people who have a plan for these lower numbers are going to be far better off than the people who have a plan for these higher numbers. Buying at these levels, should these levels ever come around, and having a plan for how you're going to manage your money and, protect your capital in case, just in case, nobody's saying it will happen, nobody's making a call, just in case it happens and you get validations to that side, you should have a plan. You should have a plan. And not everyone is on the 5-minute or the 15-minute like leverage trading. A lot of people are swing traders in this kind of a universe, and others are swing traders on this kind of a universe, and still others are in this universe, right? So there's nothing wrong if you swing trade in this type of a universe, if you're just a multi-year, if you're a monthly, right, a quarterly swing trader, you don't dismiss the concept of 20K. That's very important. That's as important as 42,500 to you. Like for somebody swing trading on quarterly, which by the way, many institutions do. They trade quarter by quarter, right? Because of course, business pays taxes on quarters. They give quarterly bonuses, all these type of things, right? They have reporting, and so for this reason, like the quarterly, the 3-month, time frame is actually perfectly reasonable. And if you're on a 3-month chart, it just looks like this. And what you can see is that you often get these quarterly backfills, right? You get this like a quarterly backfill right here. Why did you have a quarterly backfill? You know, well, it's because, you know, there are traders that are using the quarterly. There are traders that, want to be in this trade, and they want to sell here, or somewhere around here. And then they want to get in down here and do it again, and then ride this and then do it again. And there's absolutely nothing weird about talking about 20K to these people. Nothing weird about it. And this is level to level for these traders. Don't, don't dismiss this concept just because you're biased on your own time scale. Your universe might be so small, you're just not seeing what other people are seeing. And so if you're monthly, like this is the same chart that these guys are trading on the smaller, 15-minute and 5-minute time frames. It's just they're trading it on the monthly. But it's the same principles at work. What was this? A backfill, right? To this breakout. You could have traded this, right? What was this? A backfill, right? To this breakout. You could have traded this. Right? What did we have here? A backfill to this, price action. I mean, what was this? Kind of a backfill, right? To this. I mean, there's just different ways that you can take a look at these, this type of price action, and maybe, if you're a skilled enough trader, you can take advantage of those type of time frames. And so in order to get out of these boxes, a very useful thing to look at is like an origin line, right? Because you can kind of see whenever you've bought on this origin line, you've always been in a pretty good position. The only thing is that what we've been seeing is that, of course, we do have diminishing returns over time. And we also see many cases where this origin line has just like totally failed to be the support that it was supposed to be. And so that's why I believe that we're better off using like a modern channel system that uses the origin area as an actually undervalued region. And the COVID dump was an undervalued anomaly, right? Just an outlier in the data set where instead of thinking about all of these all of this price action as being above a line, thinking about it instead as being undervalued, and that this was actually just attempting to test a hidden line, and that this was actually a cup and handle. That this was actually the master origin cup and handle, basically, right? And what did that lead to? A breakout to the upside. And we can consider this, we can consider that this was basically a cup and handle, on the undervalued side of a real origin line that represents channel value rather than just some jerry-rigged, attempt to make an approximate lows. Right? This is just an approximation, and it's not a very good one. Even in the very beginning, it was violated. Right? It was violated in the very beginning, and then it did not offer any kind of support back here. Yeah, it was tested, but it didn't offer any support whatsoever. Right? Just continuously got poked through here. Like it had almost zero relevance here, and it's getting poked through right now. Like this thing does not provide support. It's just a line that somebody fiddled with and kind of like eyeballed it to there, right? Which is fine. Which is fine. It's an important concept to get people out of boxes, right, and into this type of diagonal. But what I would just like to say is that I've made this modernized kind of channel concept, like origin channel concept, where this was an undervalued, where the region within this wedge, because this master origin line is still an important concept, and I think many traders have learned about it, and so that they are using it. But the area within this wedge is just an origin. It's like an origin area where the top was up here. And so this standard was already set as the area that you want to break out above. And everything underneath that was just undervalued as the price collapsed after we had reached this point. And ever since having that apex in this kind of like this early time, right? This isn't the full chart, but we had this kind of apex and then we broke down from it. We've basically been struggling to try to get back up to it to kind of reclaim its logarithmic value. And we've done it, and then we get dumped. We've done it, and then we get dumped. We've done it, and then we had a breakout when this cup and handle kind of like was formed, right? And you can kind of see that a little bit more clearly here. It for the first time it tested above it, and then it broke down, but it was too bullish. Like it already found its energy. This area just got smaller and smaller and smaller, and it got wedged to the upside. And then what happened? Hyper expansion and way, way, way oversold. So that's why we saw this insane blow off top in 2018. Just this insane blow off top, which basically represented the maximal exuberance. And so set a new standard, basically this line, but for the top, right? And you can kind of say this wick probably represents an extreme low. Like it's unlikely that we would ever be able to violate something below this wick. And most likely we're not going to, violate something under this, under this COVID, dump, because we're just too far away from that, right? Could we say, that price action has kind of been there quite a bit, in the past? It, it is possible. I mean, but again, this is almost the same type of just fiddling around trying to jury rig something. And so I don't want to put too much importance on that. Just understand that we do have a lot of price action on this line, and that if this chart ever became super unhealthy, if the Bitcoin chart ever became super unhealthy, you can see this wick right here, right? Yeah, it's on this original origin line, but it could also represent this one, right? Where kind of this price action and that wick, and maybe, you just fool around with this stuff. It's not. This is art. This is not science. This is art, right? And so you could say maybe, maybe there's some type of conceptual midline down here. And let's just say that the world, went to nuclear war, and we got into these like origin, like levels of devaluement, of crypto because electricity. I don't know, like what would cause it. I have no idea what would cause it. Okay, like people can't access their accounts, that kind of stuff, right? And so people are just mass dumping it whenever they can, and then it comes back to these type of levels where it wasn't mainstream, whereas here it became mainstream. And what I would say is that when it became mainstream, that wasn't the time to be kind of jury rigging this origin line. This is just the crutch to get us outside of thinking horizontally and get us outside of the boxes. This is what reminds us that we're in an upward diagonal, and so that we have to think about, diagonally up and down. We can't just think about like the tiny boxes that we're in and that those ranges. We have to consider these master diagonals. And so, while this is important, it's not the most important one. We can break down from it quite often, right? And just get under it and sit under it. And, maybe we don't hang out there for a long time, but it's possible as time goes on, this is going to get tested. And we might be testing this concept right now, where, we hung out here where we just had a wick below it, and then we had some time below it, and then we actually had a lot of time below it, and maybe we're going to have even more time below it. And then you're just going to see that this line doesn't matter anymore. It never mattered. This line mattered more. This line was just an approximation. Just an approximation. A good one, but an approximation. Because if you bought at these levels, you were usually buying at very good prices. Just you missed a lot also, right? And so the real bottom that we're looking at of the mainstreamization of Bitcoin would follow up, would reside above this demand line, where as long as mainstream is kind of, or pardon me, as long as crypto is kind of mainstream, as long as it's in the general population's mind, we're probably hanging around, or above this support. And you know what? People totally forgot about crypto when COVID, like the COVID crash happened and all the market was crashing. Like crypto was the last thing that was on people's minds. And so you can see that in what this line represents. People forgot about crypto here. They didn't forget about crypto here. They were extremely greedy here. They were like, oh, all right, this is the time to buy. But here they like freaked out and just forgot about crypto. And so it kind of like dropped off mainstream, the mainstream radar. And so anybody who got in on this spike just had the value of basically a generation, right? Basically a generation. Like you struck gold, you struck better than gold, right? You might as well have been somebody buying down here, right? I mean, relatively speaking, like you bought as good of a price, in terms of cashing out. And what we're also seeing is that these blow off tops that came from the exuberance of because you can just as easily make like this type of a diagonal, right? Like you can make diagonals any way that you want. And so, if you're just connecting 2 points, it doesn't make sense, right? It doesn't make sense. You can connect any 2 points. But, when you think about how this blew off and kind of the average of this price, it's just too extreme. It's too extreme, right? And then to crash all the way down and to have this much risk built up and this much wealth just taken away, transferred into other people's hands. The mainstream can't operate that way. Big institutions can't operate that way, and so we start to see the rounding. The rounded bottom here, not a super destructive bottom like this or this. That was just COVID. But rounding bottoms, rounding tops, rounding bottoms, rounding tops. This probably would have rounded and been supported here had it not been for COVID, or it would have just rounded on the midline. And, this would have just been like it just would have been kind of a cup, basically, right? It would have just been something like this. And this sort of would have been like a cup and handle, sort of. I mean, not really, but it represents that type of price action, right? That type of positive price action. And this was just an anomaly, just kind of an anomalous like extreme. And then you get a rounded top, rounded bottom, rounded top, rounded bottom. And so the smooth price action, even though it can have extremes, right? It can have fear to fake people out. You can see how it moves, right? You can see how it's moving, on this price action, where the blow off top is up here, right? Even this one, the blow off top was up here in this region, in this kind of mid channel, right? Sub channel. This one didn't have a blow off top. Like we were all expecting, crypto to reach, $100,000, which it would have. This is precisely $100,000, right? We all had this expectation. Plan B had this expectation, and they hoodwinked us, right? They hoodwinked us. So we fell back down, and the institutions don't want blow off tops, and they don't want to lose this much value in one go. They want to have the ability to transfer, transfer accounts and all this stuff. They can't have the trauma. They can't have the trauma. And so they have to reduce some of the extremes also. And so what we're seeing here is like a less traumatic way of falling all the way down. And I think that this range, this master origin range concept is going to make a lot more sense than this master origin line in the end of the day. I think what's going to happen is that probably we do end up filling out this region down here because that represents a smooth curve, right? Represents a very smooth curve. Right? If we're going to just continue to fill this channel and just have smooth curves in it, then who knows what the exact structure will be, but effectively you're just looking for this, a sine wave, right? Effectively you're just looking for this. And who knows, we may not even see another, we may not see another high on Bitcoin until maybe 2023 or 2024. We might not see an all-time high until then. It's possible that we come back up. It is possible that we come back up. But there's a difference between dipping your toe into this water down here and being fully submerged. Once you fully submerge yourself in a channel, you tend to explore the top and bottom of the channel, at least the mid-range of it, at least the mid-range. And so the mid-range would bring us back to like 33,000, right? If we dipped our toe down from the mid-range, then maybe like 28,000. But if we were just to test the bottom of the range in just a nice, gentle way, then maybe we're talking about 25,000, even 20, even 22,000 is on the radar. And if we had like an extreme moment, like let's just say some nuclear war or something broke out, or just interest rates just were like quadrupled and we had expected them to at most double, but they quadrupled because inflation is so bad, then, maybe we're talking about that 20, or even like something as extreme as like 16, getting it like wicking down to the mid-range down here. Because of course the price action wicks. You see I'm using a line chart here, but the actual wicks, because this is based on closures, right? Whereas this is based upon even wicks, because wicks can get that low. And so if we just keep, if we just have some type of concept of where a wick could actually reach, on this concept, and then let's keep a diagonal. From a possible blow off top to where we are, something like this. We could project that we would meet this point at $17,000, okay? And this may even be a little bit higher or lower, but the absolute like traumatic bottom that I could see is 17,000, and then anything lower than that is basically like there's a nuclear holocaust in the world, okay? But could we see 17,000? Yeah, absolutely. It's totally within our master origin range to be able to reach 17,000. And that 17,000 is closer to our current price action than, some of these kind of moon boy targets, right? So again, like 100,000 is basically 60,000 away, and 17,000 is basically 25,000 away. So 17,000 is well within range, and nobody should say you shouldn't talk about these numbers. No, you should talk about these numbers, because you should have a plan in case there's something weird that happens in the world and we enter this area, which is way off from this master origin line. Like people who just obsessed with the master origin line, which was just a crutch, just a psychological crutch, which was an important development, but it's a psychological crutch. You need to get beyond it. Like we're now in a mainstream era. We're not in a dev and black markets era. Okay, like we're in a different era. This line has a slightly slower slope than the master origin line, and I think it's gonna prove itself out. Now, could I be wrong? Yeah. So what would invalidate this? Well, it's not going to invalidate it, but what would reduce the likelihood is if we did have a bounce, right? If we did have a bounce. If we bounced right here and, did whatever and kept going, and then we reached like 300,000 or something, right? Because you're not using my model anymore. You're just gonna, I have no idea. You're gonna probably use stock to flow, which is insane. It has like a $200,000 range up and down. Like Bitcoin is only $42,000, but you have a buffer room of $50,000 to $200,000 on the stock to flow model and on these Plan B things, right? So when when the range you have to play with is like 2 to 4 times, as big as your actual price, like it's kind of like nonsensical, right? It's kind of nonsensical. That's why that's why this concept that I developed is, I think it's reasonable. I think it's reasonable. Where yes, 300,000 is possible as early 2023. If we end up bouncing off of this master origin line, yeah, this model does keep that as possible, but it also tempers expectations in a way that those other models don't, right? Because one thing that we're really contending with is the rounded kind of sine wave structure of Bitcoin, right? Where what we're really talking about is something like this. And who knows, who knows if we're going to come back up or come back down. But, as long as we are not retesting the middle here, because if we had continued to come up and test the middle, I'd say, yeah, of course, this is a sine wave. We can just break out like this, right? We can do something like this, and then basically we've created an inverted head and shoulders, right? And we could come up and do something like this, sort of like we did here, right? Like we could, who knows where we would end up, but this could be like a inverted head and shoulders. We could have some like a measured move, and that measured move could bring us, as high as $200,000 even, I mean, it would take time, but it could have. It could have. Is that the most likely scenario in a world where interest rates are expanding and markets are unstable and all of that? No, so maybe that's why we're kind of like on the line right now, and we're not retesting this middle. We didn't go up to the mid 50s. We're just testing this midline on the bottom side of the mid channel of the mainstream origin channel, right? And so if we come down and test this side, more likely we're testing the bottom. More likely we're testing the bottom. And so that means that as long as we're just sitting on this midline, or worse, under it, that you should have your plan for 20K. I don't know how to drill this into people like, more strongly. Like, you should have your plan for 20K. And right now, it makes more sense to plan for 20K, right? Or let's just say 25K, because 25K is the actual bottom of this channel. And then you can also talk about just maybe like 30 or 28K rather, right? It's approximately 28K and maybe 24K, right? You can talk about those numbers right now. As long as we're headed down, and it looks like that we might, break down from 39. If we lose 39, there's almost no chance we're coming back to test the middle here. If we lose 39,000, it's almost guaranteed we're coming down, right, to 30,000, and then possibly, and most likely, eventually, 28, 24,000, something like that. And it can be kind of a windy road, right? Like, let's just kind of zoom in a little bit and look to see like what type of a windy road it can take, right? Let's pretend that's rounded. Let's look at that, right? It's kind of winding. Let's just pretend COVID didn't happen. Just kind of testing things like this, right? And so can you see something like that, like happening over here, right? Like this. Yeah, we can see that possibly happening, right? And so, yeah, you might get a bounce at 33, come back to 40, and then you have a drop down to 28, you come back to 40, you know? Because the horizontals and the diagonals, the diagonals continuously go up, right? So price action over time comes down to lower levels. And so even if you come back to retest those levels, you're technically on a lower level. You've worked your way, like you've worked your way down, but you can stay around the same price for a long time. And so this price action could feel a little bit boring, as far as the end of 2023, like until we get back to these type of prices in mid 2023. It wouldn't it wouldn't be impossible. That's what happened here. It could be playing out like that again, right? Or you could have something like this where it's more traumatic. And this seems highly likely, to be honest. If the market is just, completely scared by what's going on in the world. And when I say scared, I just mean they're making rational decisions. Like if there's not free money, if you're not getting free money, if there's not money printing going on, then at some point you're just going to dump your assets when they reach a certain price level, because whoever was like accumulating here and whoever was accumulating here, big institutions and whoever, huge, huge buyers on this like horizontal, right? This horizontal kind of like accumulation area. What are they going to do? What would you do as a responsible investor if you were still holding these accumulation bags and price had dipped below here? Let's just say that it just so happened the market didn't go the way that you expected. Like we're not going up, like we're just going down because interest rates continue to climb, and there's a global recession, and there's global war escalating, and all this stuff, and we just break this tipping point. Right? What are you going to do as a responsible investor, as an institution holding all of these bags? You're going to make sure you at least break even. And you may even front run the market, right? Which can account for this type of a drop, where just big institutions like try to front run each other. And so it cascades into a traumatic drop. That's what happened here also. Big institutions tried to front run each other. The exchanges themselves tried to front run each other. Other big players, billionaires and whatever, they tried to front run each other and they dumped all at the same time. And then the poor, like, retail investor is down here wondering what the heck happened, holding their bags, which they bought up here, right? Which they bought up here, which they bought up here. And so you become the exit liquidity for these buyers, right? For these institutional buyers who very rationally might have been accumulating at certain areas, thinking that we could go like this, because it's possible. But once you break support, you're gonna have to dump that stuff, and you might front run it, right? You might be the first guy to dump, and if you're the first guy to dump and you're holding billions worth of Bitcoin or something, then you're just gonna cause a cascading effect as you trigger the next guy's stop loss, and the next guy's stop loss, and the next guy's stop loss. Right? It just cascades all the way down. And then we find out what the real support is. Right? That's when we find out what the real support is. And the real support isn't likely, in my opinion, to be this master origin. It never has been. That's master origin line, so-called master origin line. It really has never held price action ever. Right? It was just fit to this price action. It wasn't. It's not natural. It was just fit to it, right? And nothing else ever conformed to it. Should we expect that it conforms to it now? I don't know. There's only been one region because somebody like literally like put the line there, right? They didn't account for channels or mid channels or price ranges. They literally just drew a line. So it's nonsense. I mean, it's not nonsense, but it's just conceptual. It's just an aid to show like value area. Like if you had been buying here, of course that was rational based upon this past price action. But you know what reset everything? COVID just reset everything. Look how long we had price action under that line. Even after this tremendous growth, we just hung out under that line and it just got reset, okay? There's no doubt about it. This was resistance, resistance, support, 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 right? And are we going to find out that it's support again? Probably, probably. Because otherwise we're just diminishing too much, or this is just too extreme. Like something's off about this original origin line. It just doesn't fill in the picture well enough. So what's that picture? The picture is that this is the overheated regions, right? This is overheated. This is an overheated market. It came from all the way down here, guys. This came from all the way down here, right? This is an overheated region. And the area of these two combined is pretty similar to this, right? If you just take this, if you take this little area right here, you just put it on top. Look at that. You have the exact same thing, right? And this little area right here is pretty much the same thing as like this little area down here. So, in fact, we got our blow off top. Like we had our blow off top, guys. We divided it into two sections. Right? We had the blow off top. And so what's next? What's next? Well, what was next before, We came back down to this region, right? We came back down to this region of being undervalued. Not once, but twice. Right? This was a had there been no COVID, this would have been less valuable than this area, but it would have been your second chance, right? As they kind of retest the support that we have here in this retail, this master, this mainstream retail like origin line. And so what would we expect? We might expect that we do it again. Something like this, right? Something like this, where, somewhere from the possible blow off top and then kind of retesting that diagonal and then retesting it again. And since we've moved away from this, right, you can see what happened. We tested this diagonal. If we had a blow off top like we did here, like this, I can't be exact, but this is exact for this one. You see, this point touches, right? This point touches, and this point touches, all on extreme moves. Extreme rejection, extreme spike, extreme rejection, right? So this line mattered. This anti-origin line mattered. This rejection line mattered. And if we had a blow off top, look at this. It would have come somewhere up here, like kind of a steep incline. Like maybe this would have been a steeper incline, right? Like a really blow off top. And then it would have gotten like a hard rejected, right? Sort of like this. So it probably would have just like gotten a hard rejection and then a dead cat bounce, like this dead cat bounce, right? So something like this, right? Just like this. And then this bounce here. But the point is, like, it touches here, and then it would come back down. This was probably like an overreaction during the summer. And people didn't realize how much free money was in the system. Like, they overreacted, okay? They actually didn't overreact here. And you can see this support and this support completely indicates that this line is valid. Look, support, 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 you know, broke down, but retested it perfectly. Support, 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 broke down, but retested it perfectly. Retested it perfectly, right? Rejection. So this line is highly significant. This line represents the division between, you know, oversold and undersold, right? And this master origin line, you know, this old, you know, from the old timers master origin line, it represents nothing. It just represents don't think diagonally. I mean, don't think horizontally, think diagonally, which was an important development, but it's just useless. You shouldn't use this to measure where the market might go. Okay, I mean, we might bounce off of it because we have used it as support. A lot of people do trade from it, but it's just I don't think it encapsulates what's going on. Like this master origin channel is a far better concept, just in my opinion. Of course, I developed it, so maybe I'm just being egotistic about it. But I like it, and I'm going to continue to use it, and we'll see if it validates or invalidates here. Actually, it won't be invalidated. If we you know, if we test the middle here, that's not an invalidation. That's just like same thing that happened here, right? So if we actually do come up to the mid 50s, it's not invalidated yet. Like we could come back down and then test these ranges later on. But the only thing that I would say, and so like there's still a lot of time left to invalidate this thing. But what I would say, as long as we're not retesting the midline, and if we continue just to chop down, then if we are breaking down on this mid channel of the, you know, of the sub channel, if we're knocking on the door of this, because we have a touch here, we have a touch here, and we're threatening to do it again. And if they just chop along it, we're going to break down yet again, and that's going to bring us to like the 30, you know, the low 30s. And then people are probably just going to panic sell because they've been accumulating at these levels. And so most likely we're going to come down into these 20s, maybe 28, maybe 24. Who knows? Right? Like this one, when this one broke down, you can see it never retested the top here, right? It doesn't have to. It doesn't have to. We already retested it here. We tested it so many times. Like this line is known. Like this line is known. So we don't have to retest it. But you know, we may need to get out of, you know, we may need to test the bottom of this range again, or at least the middle of the range. And we never got to the bottom here. We never tested the top here. And if it wasn't for COVID, we probably could have just avoided this whole area. And so if we do continue to chop down, again, I would just think that the rounding nature of this market, right, would just suggest that we kind of round, that we're not trying to do blow off tops anymore, right? We're not doing blow off tops anymore. We might, you know, the next time, who knows, like what's going to happen. But like for right now, we're not, you know, we're not doing rounded tops anymore. And that's why, again, just to go back to the premise of this video, that's why talking about a possible wick here, right? Like here, can make sense. It can make sense. We can break down and then have a crazy wick that comes into this area, you know, anywhere between $14,000 to $20,000. It's happened before. Bitcoin basically had its whole life in that channel, like up until 2017, and it can happen again. And it happened when we broke this support. Right when we broke that support, the traumatic event happened. So again, like my concept of an origin line seems to outperform this old concept of an origin line. This old origin line concept, I think traders who hang on to that origin line concept, I think they're going to be disappointed in the future. They need to switch to this model, most likely, to this model that I'm developing. You know, this origin channel. Just call it the origin channel. Okay, it includes down here, of course, because this is actually the origin channel, but this is the bigger channel. Like in some way, like this area and this area is just kind of like a mid channel. Could do it like that. I don't know how best to address this thing, but yeah, I think this is going to prove itself. And if we do get up here and we hold onto this line, right? It's still not in conflict, right? It's still not in conflict with anything. Like there's nothing that's broken down that concept, because again, like if the world turns bullish and we come up and we get to these mid 50s and we kind of like test it and continue to go, there's nothing wrong with that. Like you can do that. You can do that in this model. Just that I would predict that the extreme would be, 250,000, and more likely 150,000 is your limit. And if we're still kind of like, accumulating before we get to another halving or something like that, then maybe we're talking about like, you know, like 70,000, and just kind of testing this area up here and then getting rejected, right? And then accumulating. And we could maybe just skirt off the middle. So yeah, in that case, maybe like a range between 70 to 40 becomes a range, like a smooth curve range. But it doesn't negate the fact that this 20 area is still highly possible and well within play if you're using this type of a concept. And if you're a trader on like the quarterly or the monthly, you're a swing trader who are looking for the best value areas, like we're starting to enter that zone. And to the guys who are just focused on the 5 minutes and the 15 minutes and the hourly and the 4 hour, of course this stuff seems absurd to you because you're not trading on those time frames. But don't judge it by that, because other people are trading on these time frames. Other people are trying to buy here, and here and here and here and here and here on this type of support. And now they want to see this breakdown. If now they see that we're broken down into this area, and so they're going to try to buy on some of these lower supports or even in this area if possible, because this is the trade that they're making. And this is the trade of their lifetime. And if we reach this, it's highly, highly important to get it right. So don't tell them, don't talk about 20K. They need a plan. Like we need plans for this. We don't want all of our money locked up, bought in the middle of nowhere. Because for us, this is the middle of the range. What's the concept? Don't buy in the middle of the range. You don't have to buy in the middle of the range. You don't always have to be, buying and selling, right? Sometimes it's okay to just be in cash and wait for support, right? And we're just in the middle of a range. We're in the middle of a mid channel, right? In the middle of a range. So we don't need to be, be playing, level by level right here. We can be playing support and resistances, and we know that we're closer to this resistance than we are to this mid support, which has been highly significant, and also the bottom supports, right, which have been very significant as well. In fact, this one, I should make it a line. This one should be more of a dot because this line seems to be very significant. Let's make it a little bit brighter. Like you can pretty easily catch a low here on this purple line at the bottom. Even if we don't hit the white line, like again, like 28K might be highly, highly possible. And so this is where you want to really be buying. You know, if it's possible to ever get to this support, then this is where you want to be buying if you're a macro swing trader. And I know this video is already extremely long, but there's other concepts that I've been thinking about and how this stuff can be play out. Let's see what I can get rid of here. Get rid of this. Do I need that one? Probably not. Put these in a group. So one thing we can see is kind of a relationship between this area of value here. It's a really great area to buy. Nothing traumatic in this area. This was just a normal price action of Bitcoin. This was COVID. So this normal price action had kind of a relationship with the apex of the of the bull run, the blow off top, and the ultimate capitulation. Right? Like there's a relationship here, and of course the support that it kind of ran on, and this diagonal of this peak right here, like where we are right now on the Bitcoin chart. Let me just hide everything. Like where we are right now, where we just bounced from. It's very similar to this one right here. Very similar. A lot of similarities going on. And let me show you this using the Gaussian channels. You see how this Gaussian channel just turned red right here? Turned red right here. And you hit the mid channel of the Gaussian channel. Hit the mid channel of the Gaussian channel and got rejected. Mid channel, rejected. I've been showing you these Gaussian channels, almost every day, at least every week for months. For months, as we've calibrated these ideas. Okay, now's the moment to be really paying attention to it because we're entering that red zone. And there's a relationship here. I'm trying to show you that relationship. So you see how this crossover right here and this crossover right here is significant. So what I've done is I've created a concept of the blow off top that never happened, the blow off top that never was, right? Something like this, right? We never had this blow off top, but we basically do have a line that interacts with this area, just like we have one here. And this line crossed through the tipping point. And so if we have a tipping point, we can consider that it might be somewhere near that line. And if we take a more generous line that gives us a little bit more advanced notice, then we can take it from under the extreme blow off top and just to the majority price action and kind of try to hit these majority price action areas. And so I'm just like eyeballing it because I have to imagine this blow off top because this represents momentum and energy in the system, right? And so reaction rallies will occur accordingly. There will be equal and opposite reactions in certain ways. And so if we just have a concept of this and we try to match majority price action, then really what we can consider is that we're getting very close to the tipping point. And whereas the tipping point on this one took 100 days, There's something different about this setup, which I think the tipping point could come as soon as 60 days. Okay, so it could come as soon as 2 months or even less. And when we reach that tipping point, I think we're going to have a traumatic fall like this. Traumatic fall. I mean, it could round down also, or just take steps down. But anyway, there's going to be a fall. You know, because we're going to break certain values where people bought in, and the expectations of what this asset was going to do gets broken, and so they're going to get out of the market. And that could be as much as, a 30 to 50% price drop. And I would expect it to be somewhere around mid-May. And then we enter this highly valuable buying zone. Right? Something like that. We enter this highly valuable buying zone where you want to be buying at the bottom of it. And there's some clues here. I have an arrow right here because there's a clue in the price action. The price action was very flat here. You see these wicks and this price action, even this price action right here in the future, if we're just considering how to predict this area, it's very flat. But in this case, we have kind of extreme diagonals. And so the price action that I would consider is diagonal. That's why this timeline is a bit more compressed. And I think it's on purpose because you have to compress the timeline. Otherwise, people are going to think that they have 100 days, when in reality, they just have like 60 days at best. Right? 60 days or less. And if we just follow the kind of price action that happens here, what we would expect is this kind of a path. I don't know what color to make this, kind of like that. We have this type of price action that we might consider. And if we look at the kind of the apex over here of the Gaussian channel, then we can see that this kind of represents like a point where this triangle kind of forms. And we already have a line of resistance right here. And so we can suggest that if we have a bounce up, we're probably not going to break that. Even if we have an extreme reaction rally, we're probably not going to break 74,000. Because it's probably going to hold this support. This resistance. It's going to get rejected from that resistance because we're still accumulating for the next like a halving event or whatever. We're still accumulating for the future to have an extreme breakout. Like anyone who thinks it's going to happen this year, like they're kidding themselves. They're kidding themselves. Like we'd have to get over 70,000 very fast. It's just think it's better to have this type of plan than some type of moon boy plan. And again, I'm talking to people who are swing trading on the macro. I'm not talking about 15-minute like level traders. Okay, this stuff is important. Depending on your time frame, it's important. And so we do have this natural resistance, and that means I can set a target there. I can set a target. And if I have a target just based upon this price action down here, right, you can see this kind of price action, then I can have it over here. And I can draw my line to extend through it. And this creates 2 points. This creates 2 points on the crossover where I can have the top of this triangle, sort of like the top of this triangle. And we can just hypothesize that this resistance will continue. And this diagonal triangle might represent more of the kind of like energy of the system in the breakout. And it conforms almost identically. Right? It conforms almost identically. This price action kind of led to this second rally, which is interesting, which we're measuring from here. It's just interesting. So who knows where the breakout might actually be? It could be here, it could be here, it could be later. But once you cross this line, right, and once your Gaussian channel, gets basically parallel with it again, or healthy, right, in the green, after maybe a couple reaction rallies, you're gonna potentially be concluding this wedge and breaking out of it. And this is just a suggested path, but basically we can infer like our arrow from the direction of the bottom of these wicks, and this triangle has stayed consistent, like parallel. Like this triangle is parallel with that arrow. And since we have an arrow right here, right, based upon these wicks, we can infer, again, that the top of this triangle is going to be parallel to it. It just so happens to match this price action. So in some sense, it could represent just something suppressive in the market, just a kind of a suppressive region that's going to interact with this resistance. That's why I can infer that price action will kind of move like this, possibly, which is just happens to be very similar to this, right? Very similar. But it may take longer to have a breakout, and we may not have like a kind of a COVID dump. Maybe we do have a back test of some sort, right? Maybe we do have a back test of some sort. I don't know, where it would go to, but maybe we have some type of back test. And because this was a pretty good candle, right? So maybe even we do like this type of thing. Seems, unlikely. Like most likely we would keep within this range. But let's put on the my channels. Yeah, I mean, yeah, it's more than allowed for. It's totally allowed for within my concept. But yeah, right there would be kind of a limitation. I mean, if we did have a wick, why not? I really don't want to just project all of this stuff. Like that's the point where you're saying like, take it level by level, on the macro. This is just speculation, total speculation. However, it is interesting because you can use these relationships to kind of project possible price action. And it's not blind. It's not like you're just like winging it. You're actually using like relationships that have already established themselves in terms of the bots and the billionaires and the exchanges and the big money in the system. Like they actually use these relationships to decide when to get in and out, these relative positions. And so it's possible and highly likely even that they would follow similar psychologies should we enter similar regions. Of course, this is all invalidated This is all invalidated if we just do this, But is that likely? I don't know. I don't know. I mean, are stocks just going to like crazily spike for some reason this year? Not likely. More likely, the stock market is going to continue to come down. And what that means is that more likely crypto is going to continue to come down also. And so, as a macro swing trader, where do I put my emphasis? In this region, which includes the 20s. And so that's where I want to buy down here. And if I develop an extreme range based upon these relationships, then we're really talking about this area right here, right? Which is something like 29,000 to 22,000. And that's what I would target. That's what I would target as a macro swing trader, not as a 5-minute or 15-minute, small time frames, levels trader, who I totally respect. And for them, I understand like these numbers are stupid to talk about because they're doing the hard work every single day, right? Just we can also develop these concepts. And if this does get invalidated and we end up going to, breaking the mid 55,000s, like breaking 57,000 and then building on top of that, then we just create a new concept. We just have to create a new concept. Just that's not the most probable situation in this type of a market. The most probable situation is that the stock market is having a macro correction and that crypto tends to be led by the stock market. And as long as we have a stock market that's overheated this much, like we can see corrections like this. And since we haven't seen a correction like this yet, we're just halfway there. It means there's a lot more to come, right? Where's our MACD? Let's go to the monthly. Right, like we're up here. We're up here. And so what's most likely? That we just keep it going forever? We've already crossed negatively. Right? What's more likely? That we're going to have a major correction. Like a major correction. And that's going to drag crypto with it. It's going to drag crypto with it. It's going to drag tech stocks. It's going to drag everything with it. And it's going to be multi-year, right? This correction took from 2000 all the way to 2022. It took 2 years. You could kind of say it's turning around here in 2001. I mean, started to turn around at least. It could take at least a year. So when I'm talking about 2023, don't get too shocked, right? Like 2022 may not be what you were looking for. And when we look at Bitcoin, it looks identical. I mean, not as crazy as the S&P, but I mean, pretty crazy, right? And so what do we have? A major correction. What are we doing? The exact same thing. We're doing the exact same thing that we did in 2018. Major correction. Even bigger, right? So how can I talk about these areas like in the 20s? Oh, how terrible of me. How terrible of me to have a contingency plan, right? Don't tell people not to talk about the 20s. You should be encouraging people to talk about the 20s, just in case. You should be encouraging people to talk about the 20s. And concepts that, if everyone's talking about like, 28K or whatever, then the market's going to front run them at 33K or something. That's hopium. That's hopium. I mean, it could happen because we're having rounded tops. We can also have rounded bottoms that get softened, right? They get reduced in the extreme pain that they cause. And so maybe we don't ever end up reaching 22,000. Maybe we get 28,000 or 33,000 maybe. But it doesn't mean you don't have a plan for that. You should have more of a plan for that. You should be talking about this $20,000 range more than you're talking about like 100,000. And that's just not the case. It's just not the case of what's happening in the crypto community. All right, guys. I know that was a long one, but this is just kind of a chill stream for the weekend. So hope you enjoyed it. That was your alpha for the day. Stay safe and happy trading.